Islamic Fund Management. Unit Trust, Exchange Traded Funds, Real Estate Investment, Investment Funds.
Assalamualaikum and very good morning. My name is Nur Alia Syafiqatun Nabiha binti Muhammad and my matric number is A18A0532.
AAOIFI define investment fund as the fund are managed on the basis of either mudharabah or wakalah agency contract. Investment fund. The definition continues by setting out the setting ruling the govern Islamic investment fund. Investment funds are permissioned by Sharia because funds are a form of collective investment that continue throughout their term. The rights and duties of participants are defined and restricted by the common interest. The same relate to third parties' rights.
Hi, Assalamualaikum. My name is Nur Najira binti Muhammad Fauzi. My matrix number is A18880605. Unit trust can be defined as a pool investment plan where the capital contributions of investors are combined into a legally formed trust fund, and then it is invested by professional fund managers acting on behalf of the investors in a portfolio of marketable securities. One of the important features of unit trust is that professional fund managers are employed to manage the funds, so the investors' monies will be pooled together to be invested in a single diversified investment portfolio, which are comprised stocks, bonds and others, in accordance with the investment objective.
Is Siti Akilah binti Zaba with my number matric A180840.
The classification and types of Islamic funds. Classification divided by two: open-end fund and closed-end fund. For feathers, open-end fund is collective investment, can issue and redeem units. For character, refer to fund operated, trading, buying and selling through unit trust, price compute in daily basis. For closed-end fund, for feather, company structure when the company will issue share. For characters, refer to a funds with fixed numbers. For trading, buying and selling take place in secondary market, and the price share determined entirely by market demand. Types of funds. For equity funds, primarily invest in the stock market, and income funds means government security invest money market instruments and corporate bonds. For money market funds means to operate similar way to bank account. For balance funds means generates a balanced return of both current income, and the Islamic funds means Sharia principle separate between non-halal and business activity. And lastly, sukuk funds means invest for portfolio of sukuk to distribute annual income.
Hi, my name is Nur Shazwina Ibrahim, A1A80639.
Advantage of Unit Trust. Diversification. Many investors lack sufficient resources to establish and educate diversification on their own. Funds with variety of objective. Different types of funds are created for different investment objectives. So, investors should have no problem finding funds that meet their objective in terms of return and risk. Record-keeping services. The management company maintains and administers the records of shareholders' activity for a given year. Professional management. Fund managers who are knowledgeable about investment and they have good track records. Method tax. Unit trusts can be bought and sold easily, thus they do not suffer from liquidity risk. Affordability. Only a small amount of money is needed to participate in a portfolio of investment, which enjoy the same benefit as indirect investment. Disadvantages of unit trust. Load fee. This is sale charge added to the fund's NAV when unit trust is sold. It is as high as 10%. High annual expenses. The operating expenses like accounting, legal, postage, management fees has to be borne by the investor. Transaction costs. Management company must also pay transaction costs to buy and sell securities even though they trade in large blocks.
My name is Farhana Mati Zakaria, matric number A18A0127.
Real Estate Investment Trust or REIT. Definition of REIT is an investment in real estate may be by way of direct ownership or a shareholding in a single-purpose company whose principal assets comprise real estate. Types of REIT. First, property or equity REIT invests in shopping centers and office buildings. Second, mortgage REIT invests in mortgages. Third, hybrid REIT invests in both properties and mortgages. Islamic REIT is a collective investment scheme in real estate in which the tenants operate permissible activities according to the Sharia. Islamic REIT versus conventional REIT. Fundamentally, not much different. Income derived from the tenant. Objective, administration, and structure very similar to conventional REIT. Malaysian SC guidelines for Islamic REIT. Financial services based on riba or interest. Manufacture or sale of non-halal products or related products, gambling or gaming, conventional insurance, hotels and resorts, manufacture or sale of tobacco-based products or related products, entertainment activities that are non-permissible according to the Sharia.
I will present about Malaysian Security Commission guidelines for Islamic REIT. Firstly is acceptance of new tenancy and renewal of existing tenancy. The Sharia Committee must advise the Islamic REIT managers to not accept the new tenants who operate activities that are fully non-permissible. Second is acquisition of real estate post-listing. A building where all the tenant operates only one permissible activities cannot be included in an Islamic REIT even if the total rental complies with the 20% ruling. Instrument used in investment, deposit and financing. The Islamic REIT manager must ensure that all forms of investment, deposit and financing instruments comply with Sharia principle. Lastly is takaful coverage. Islamic REIT must use takaful scheme to insure the real estate. How would a Malaysian Islamic REIT be administered? Firstly, all REIT are governed by multiple levels of stakeholders to ensure maximum investor protection. Second, Islamic REIT must comply with both Security Commission guidelines on REITs and Security Commission guidelines for Islamic REIT. So, All REITs are established through a deed of trust executed by the trustee who acts on behalf of the unit holder.
Assalamualaikum. My name is Mariza binti Agustia. My matric number A18A0254.
Disadvantages of ETF. ETF are bound to the up and down of market. The ETF is not representative of the performance of the benchmark index. Islamic Exchange Traded Fund (IETF). IETF and conventional ETF share common characteristics. IETF required to appoint a Sharia advisor or committee. So this is the basic flow of IETF. So this chapter you have learned about investment fund, unit trust, REIT and ETF.
Assalamualaikum and hi, my name is Siti Azwani binti Azman, matric number A18A0842. Exchange-traded funds are one of the securities group that track the underlying index, although they may invest in a variety of industry sectors or use a variety of strategies. ETFs are quite similar to mutual funds with some differences. There are some features of ETF. First, a good option for small investors. Second, pays out in dividend from underlying stock. Third, offer greater tax benefits than mutual funds. Fourth, low annual fee. Fifth, replicate performance of commodity. Comparison of investment funds. There are almost 80% characters are same for ETF and stocks, while for unit trust, there are difference 100% compared to ETF and stocks. Of ETF. ETF also has the characters of unit trust. Example, the investor buys one unit trust. It is same as holding stock on the stock exchange or share of the company. Next, in unit trust, the active management also involved to choose the stock that produce higher returns than the market. Advantages of ETF. First, access to many stocks across various industries. Second, risk management through diversification that only focus on targeted industries but low fees than mutual funds.